Let's get going over here. Mic check, mic check. This is Jordan with Conquer the Markets. In today's session, we're going to be discussing the possible pattern that is forming that could lead to at least another 20% correction, a distribution pattern that's occurring, a bearish structure that's also forming before you go and get yourself in a tough. Let's point out a couple of things. First of all, I feel like I've earned the right to talk about these things becoming bullish off of the bottom and riding the wave up. We're currently in a pullback. That pullback is nothing more than 12-15%, completely normal. So is a 30% pullback in a bull market. We'll be talking about two things: where this potential event could lead to, the importance of the test of this bull market breakout that it would bring into play. And then we're also going to be talking about where it's invalidated, where on the upside we see that we are seeing a resumption of the current trend in place and where that is currently targeting. So just sit back, enjoy, partake, learn, observe, and walk away here with a little bit, let's say, further, just a different vantage point of what's occurring out there in the market. And that's how we do it here. Kevin, great to see you here. Gabriel, everyone, great to have you live for today's session. If at any point in the time that you enjoy today's stream, go ahead and hit the thumbs up button. If you're watching this on the replay, big shout out. If you're able to go ahead and leave a comment, please do that. And at the same time, if you're new here, welcome. Make sure that you subscribe, hit the bell notifications. Let's get going, everyone. And we're going to start off over here with a chart that everyone is familiar with. We're looking since late 2021 into the current, about a year's worth of time, 2023. You could see that nice, easy trend line off of the bottom. I'm going to be adding something new to our overall view of the market here. That trend line is going to, as I point out, become very important. You'll be able to see it. By the way, if you do not want to hit the thumbs up and you prefer to hit the thumbs down, please do. That helps immensely with the algorithm. It loves the interaction. I love you for it. I really do. Please go ahead and do that. On top of that, the algorithm will also not show you any further content. And I really like that also. So go ahead, you choose, you vote. Here we go. I'm going to go ahead and start breaking this chart down for you. Again, we're going to be looking at the potential distribution pattern that is currently forming. We're going to be looking at the potential bearish structure. Two different things that are happening at once. The bearish structure that is developing. We'll be looking at when that confirms, what the targets are on the downside, what important event that brings into the market, and that does bring out the bull market breakout. You remember when I called the underbelly breakouts, told you about the bull market breaking out? We all went long under 17,000. So now that we are coming in here, and aside from the U.S. banking crisis, this has been easy peasy. But there's nothing easy peasy about bull markets. Expect at all times at least 30% corrections. And then we're going to be talking about where this potential bearishness is invalidated, where the resumption up continues of the current trend in place, and what the next targets on the upside would be. Great to see everyone here this morning. Old school CTM all over the place. Let's get going. I'm going to go ahead and add in another line over here. Most of you are familiar with that line. That line I call the previous cycle ceiling. By the way, that is the line that helped us understand that a bull market breakout was. So I call it the previous cycle ceiling. It's also where the 3 arrows in Celsius low happened. They collapsed into the previous cycle ceiling. I'm not going to get into it now because we got a lot to talk about. If you want to go back on your own chart and you want to go back until December 2017, in the previous cycle, you could see not the highest price point, but you could see where price formed resistance. It's right underneath that level. And then in 2020, upon the bull market breakout, you could also see where price confirmed that area into support. It's a very, very important area. I'm going to go ahead and add in over here underneath that previous cycle ceiling was the FTX collapse. Huge, huge, huge event in the market, and it bought price underneath the previous cycle ceiling. You have to wonder if it would have been possible for the previous cycle ceiling to have given way if it were not for the collapse of FTX. You also have to wonder what could happen in the markets going forward from this point that could cause price to either test or bring it below that. Because it would have to be a major event from what the way I view things. We saw major collapses. Celsius, 3 arrows at the same time. FTX collapse, $8 billion, $9 billion absolute fraud. You would have to imagine that something big were to happen. Otherwise, that could be the low. Now, we could have something like a credit event going forward, a major liquidity crisis. If that happened, it's quite possible that those lows could be tested and or broken out. I do not think that just normal price action would bring it below there. Maybe for a retest to firm it up, that would not be too unusual, but let's keep going over here. And I added this line over here off the bottom. We've talked a lot about that line in previous sessions, and I added this one over here because I don't know that that green line is right, and I do lean towards that dotted line having the correct angle, but we will look at that at another time together. But it's on the chart for good reason. Now we have over here, most of you are familiar with it. We called it out in real time. Most people were aware of the bear market log scale trend line breakout that occurred. This is the second repair. When I talk about being bullish on Bitcoin, we're looking at two major repairs so far that you've seen above the previous cycle ceiling. It's where we called Gemma, so the downside. It's where we called the bull market breakout predictions. It was then affirmed on the breakout above the log scale. A lot of people picked it up then. It's a little late for our taste, but hey, what do we know? Bringing it up forward, then you saw that line tested twice. One of them was during that U.S. banking crisis. I'm going to come back to the U.S. banking crisis in a little bit, and I want you to remember that huge spike down that is occurring over there. And then we have over here this important level. This is the Luna low. You can see it spikes down into that level. Then price collapses and rallies all the way up and tests the Luna low after the 3 arrows in Celsius. It's called the rally resistance. Price right now is currently trading above there. That was the third major repair that is taking place, and all three of those repairs remain intact. Quite healthy over here. We want to see a continuation on this mere tiny pullback to show that momentum is continuing upwards. This line over here, you can see why I added it. Go ahead and back and look on the left of the chart. You can see those touches that occurred. You can see the I'm pointing out over here, and then again over here, and you can see the consolidation in this area as well. And then that was resistance, and we have come above it twice, making a lower high, unable to hold that fourth repair, and are currently consolidating right now as we speak. And then I have one more line above it, because I have one more line because I'm looking at a resistance above us. Now, if I were to go ahead and you can follow the mouse crosshairs and add something around 37,000 and so on and so forth, if price is able to start working its way up higher, we'll be looking at overhead resistance. But this chart is a chart that we look at and refer to normally. And if I did not explain to you off the get-go of how we got here, for most people, it would be very confusing. They wouldn't understand it. And I had to today go over it because we're going to be picking up this line that I'm explaining right over here. Nick, I was watching Nick's chart this morning, and I picked up right away. We have this line on the chart already because we're looking at a descending wedge. You can see that descending wedge. I'm pointing at the resistance of the descending wedge. This is the lower support of the wedge, and this is the price action within that wedge. And that's an entirely bullish pattern. I love descending wedges. And then you can see the breakout of the descending wedge occurring over here. Now, just as much as I love them, by the way, if that pattern were to fail, and we see failures of patterns all the time, that would be, this could be a liquidity grab up over here. Actually, Peter from Game of Trades has showed us on the equity markets, looking at 2008, looking at other periods of what it looks like when you get the breakout. He's like, this time is not different, expecting it to roll over right away. But this could be nothing more than an elongated move up. And then you could see this line that we're coming into, that dotted line and the green line, and they're both pretty close over there. A break below that line, by the way, that would be a failure of the bull market breakout that's currently in play. We want to be aware of it because it's the markets and anything could happen. And why we root for Bitcoin and we want things to be easy is really and rarely never easy. So I want to focus on this line over here, and you could see that Nick went ahead and he's got this line, and my eyes were able to pick up right away the structure that's forming over here. And it's a good line. I was able to see that instantly. And then I saw Nick's awareness of placing it off the November high. That's a really good look. You can see other people are like, what is this? Ha, ha, ha. And I responded, and I'm like, you know, that's high level TA. That's what that is right there. And that's the truth of it. So Nick, glad for that little assist. And I want to go ahead and just show you a little bit what that looks like. Go ahead and add that line. I'm cloning that line up. By the way, before we even do that, you could see these lines down over here. That looks a little ominous, don't you think? Here's the green line, the dotted line that we were just looking at. And then you'll notice that we have these lines down over here, and they're for a reason. I hope that we never have to look at them. If we don't break this line over here, there's no need for us to look at what's down over there. And we'll just, you know, we'll get there if we need to. How about that? So let me zoom in a little bit and let me continue showing that clone trend line off of the low. And I'm going to bring it up now so you can see clearly. I could see 1, 2. You could see these touches. And that line, I could see, is affirming the structure of the market very well over here. And that's important. I could see again off these touches, right? That once again, that line is affirming. And then again, you could see that line is definitely resistance. So we could place it up here. And the reason we want to place it up here is so that if we are to, we talked about if we have any resumption upwards, what type of resistance that we're targeting. We have the horizontal resistance right up here. It's coming in somewhere around, let's call it, I don't know, 32, 33,000. And then above us, you could see that we have that resistance as well. That's coming in at about 34,000. That's actually probably pretty important awareness and resistance to be aware of, because if we break above this level here, 33,000, there's a point in time where perma bears are going to flip bullish. And this could be, it's so funny because the perma bears have been calling out bull traps the whole way up. The 100% move up, they're calling out bull traps, bull traps, bull traps. What happens if the bear trap, you know, occurs all the way, what happens if they fall into the bull trap? What happens if the bull trap occurs all the way up here, and it's what causes the perma bears, or many of them, to flip bullish right into resistance? Not many people look at one touch resistance. It's a very important line for us to be looking at, and we'll continue to do that. The line was initially drawn in, if you go back to the beginning of the session, and you could see this line right over here. This is the line that the touch is here, 1, 2, and then if it's spiked under, but this is where it firmed up and found itself, and then the touch is over here into November, and that is the prime line. And then I showed you that it makes sense by looking at where, you can see it right here, it continues to show the structure of the market. And you can see that the market is very much paying attention to that structure. You can see it very clearly here as well. And you can see all the resistance, and because of that, that allows us to have a one-touch resistance above. And as we begin looking at failures of this current potential bearish distribution, this bearish structure forming, that would be our price target that we're looking at for the next move up. Now, that doesn't mean that price couldn't clear above that line. And if it does, that's entirely bullish. And if that's happening, then likely there's a better or stronger chance that we're going to be targeting somewhere around 50K, the 0.786 retracement fib. But we got a lot to get into us if that's going to happen. So let's continue forward over here. And I want to start over here and looking before I get into this pattern over here, which is a potential bearish structure forming. I want to show you and look at what could be, with an open mind, distribution forming. Everyone remembers, or you should, if you were in the space back into April 2021, we saw what everyone realized was, after the fact, was a Wyckoff distribution pattern. You could see it right over here. You could see the 1, 2, 3, and then number 4 is a lower high. And then it breaks down and boom. So let's go ahead and let's look at that. I'm just going to go ahead. You could use the bar right over here, the bar pattern tool, to go ahead and do that yourself. And I'm just going to go ahead and put it over there and to show you, give you a bit of perspective. And I just want you to, I told you that I was going to show you. Let me zoom in over here for 1 minute. I want you to remember what was happening over here. This is where we had that spike down, the US banking crisis. And I just want you to go ahead and, you know, put it out there that if we didn't have a banking crisis inside the United States, Silicon Valley Bank going under, that there's a chance that price would have held this support. There's a chance we would not have made a lower low over here had we not had an enormous banking crisis inside the US. So whether that is true or not, I do not know. You don't know, but I want you to entertain that. I want you to entertain that a lot. And then I want you to show, or I want to show you very clearly, because you see this area, I'm asking you to just omit that. That happened in real life. We had a US banking crisis. Bitcoin was not immune. Bitcoin was under pressure. And then on the backstop of that whole situation, Bitcoin, like a beach ball underwater, shot up. It was actually beautiful to see the way that CTM 2.0 handled that in real time. So let me just go ahead and just show you that we were neutral on the sidelines. And you could see that is a major position of power. Not only that, that was a massive move to the upside. CTM doesn't care. CTM 2.0 doesn't care. It's a momentum-based system. Taking a trade that most people thought was ridiculously chasing momentum to the upside into an overbought situation, and that put in a nice size gain. We have been on the sidelines here now going on 10 days. Look at that. You can see that we are on 10 days right now out of the market. What a position of power, knowing when to be in the market, when to be out of the market, and on what side is absolutely priceless. CTM 2.0, are you mentally strong? Are you able to stay out of the market when you do not belong in the market? Because if you're not, that's awesome. You just need to be aware of that. That's a little nugget. If you pick up those nuggets, they turn into a pile, a treasure pile. But if you find yourself always looking, forcing trades, that's not a bad thing. It's because you could improve upon it. I mean, it's bad in that that's the easiest thing for you to improve on, to be a better trader, is stop forcing things and wait for things to happen. Pick your levels, manage your risk around those levels, and you're going to go ahead and drastically begin improving your results. But we're trading a momentum-based system. That momentum has flatlined. There's no business being in the market when price is going sideways. There is no upside momentum. Now, if that upside momentum returns, we will be there to the upside. All right, jumping back over here. And I'm asking you to go ahead and omit that in your brain for a little bit. And I want to point out for you so you can see it. So I don't know if I line it up like this or like this, but I'll point it out to you in real time. So let me zoom in. I want you to see this first peak over here. And this is just an exact replica of the April distribution that occurred. Okay? And you could see, by the way, it's not a bad thing. If you're bullish on Bitcoin and maybe you were not following CTM, maybe you missed it on your own. Maybe the break above 17,250 caught you off guard, and there's a lot of fear in the market. The vast majority of all people out there completely missed the move up. That's just the way it is. The only people who didn't miss it were the people who held throughout the bear market. Those people that like the perma bulls, the people that were like, oh no, this is nothing more than a running correction. Like they're like, oh look, I was right. I mean, that's the only people. That's just the way it is. Look, over here you have this first peak. I'll call it number 1. And you can see that occurring over here, number 1. Now, each one of these makes a higher high. So you have the first peak, and then you have the second peak. And you can see the higher high that's being made. And then you have the third peak over here. Third peak occurring. And then after the third peak, the fourth peak puts in a lower high, right? And then you can see the lower high occurring over here. And now you're looking for nothing more than potential distribution that's occurring. Now, I know people are very bullish. I know people are very emotional, and I know people are very excited. If you look at past cycle behavior around this time, it suggests that the low is in. And that why in a crisis situation, we may retest that low. That's what happened. The low of December 2018 was retested during the March 2020 crisis. So 4-year cycle behavior suggests that likely the low is in. There could be another scare, and then we enter an accumulation. And then there are other people who are thinking that, well, we're going up to new all-time highs before the halving in 2024. My count was wrong. Man. It could happen, which is why we continue to watch both sides. But we have moved 100% off of the low in a macro environment of high uncertainty, including the whole U.S. can't get their ducks in a row and is dealing with a massive situation. They're running out of money to pay the bills. And unless they raise the debt ceiling, they're going to be unable to pay the bills. So it's a big hoopla, and the markets really do not like uncertainty. And now the clock is ticking. And this is going to become, some people like to call it a narrative. I call it what is. Today, President Biden and House Leader McCarthy are meeting at 3 o'clock p.m. Eastern time, but the markets close at 4 p.m. Eastern time, the public markets. Likely, before the close of the market, there will be no resolution. Likely, after the close of the markets, there will be no resolution, and then the president takes off for Japan tomorrow. So the clock continues ticking. The markets may become a little jittery, and we are seeing what looks like a potential pattern that you should be aware of. Now, I'm asking you to take the liberty. In the difference between these two things is this area over here that I'm highlighting. That I'm saying to you that potentially has occurred because of the U.S. banking crisis. And you could see that for this pattern to mirror each other, that you would not have had taking out that low over here. It just wouldn't have happened. So I'm asking you to take that liberty over there. And by the way, I don't really know what the measured move is, but let's just take a look at it like this. Let me jump back over here with you. And I'm going to go ahead and I'm going to just go like this. Now I'm freestyling the liberty. Off of number 4, here is 1, 2, 3, 4. I'm just looking at the swing low of 4, right, to the high. Oof. Is that right? Hold on one second. That looks a little. Let me go the other way. Right? So about a 27% drawdown. And now I'm going to keep things very simple. I have no idea if this is right or not, or if you should be doing this. But I'm out there experimenting all the time, and I'm going to say that I'm going to use that. I mean, it spiked down lower than that. It spiked down a lot lower. Came down 36%. But I'm just using that as a rough estimate. And again, I have no data to back that up. I have no idea if that's allowed. So I'm going to go ahead and I'm just going to go off of to the low down there, right? The low off there, and I'm coming down. If price were to break down, you know, that puts us somewhere around, let's just say, $22,000. Why that's important, I'm going to just come back over here, and I pointed out this trend line over here. That is what I deem to be the bull market breakout. If that were to fail, the bull market breakout is probably invalidated and is highly in jeopardy. You do not want that line to fail at all. Now, I know that we have the previous cycle support below. We would love to see, in a perfect world, if that were to happen, that we said before, we've seen in four-year cycle behavior for Bitcoin, or should I call it the every $210,000 block behavior? Whatever. We've seen below tested. If that were to break down and get tested and hold, okay, you could that would be a hold your breath type moment. That's for sure. So how far away is that, right? We're looking at, if we were to break down below, we got support over here, 25,200. If we saw this distribution event break down further, at that point, we're coming in towards that area of the bull market breakout. It's something you should be aware of. Now, there's also to say, and I don't know if you were doing this. I don't know if this is correct either. So let me jump in but I want to show you one more thing. All right. Why we're here together. Let me just jump in and say the way that I showed you that count, I do think is correct. Right? We went 1, 2, 3, 4. Yeah, that's the way I see it. I was gonna try to wonder if this was just counted a little different, including this one, but I don't think that's the case. I think we got it good. So we can move on a little bit. The NASDAQ is just absolutely resilient here. And at the end of the day, regardless of your thoughts and beliefs, all that matters is price around those magic levels. Make sure you stay on the right side. All right, let's look at our current chart over here off the linear. And I want to pick up off on our analysis. I tweeted this out yesterday. You might have seen this. And this is a potential distribution event that is occurring, right? Now, it doesn't seem to have the same makeup as this one, which led off for a little bit of a further spill off, but it looks like a mini one, right? So I guess what I was trying to say before when I stopped myself is, what happens if this is 1, 2, 3, 4? If that is occurring, and then we're looking at, nah, that's not, I'm making stuff up. Anyway, guess what? Like 95% of the tangents you go down lead to nothing. Like 95% of the tangents that you go into and explore, they lead to nothing. But if you're not taking the time to explore all the different tangents, you're never going to get to the road and the path that you need to be on. That's the truth of it. I want you to look at this bearish structure that is developing as well in conjunction. So we have a bearish potential distribution event occurring. And now we also have over here a bearish structure. You have it in the top right. I want you to go ahead. I'm going to make it easier for you. The only thing different between what's happening in real time over here and that picture is right here where I'm pointing to. Now we had this higher low occur between 1 and 2. That's a higher low. And over here, you could see that it's actually a lower low. So that's one difference that I could point out in this pattern for you. But I want you to go ahead and see it. You can see the dots lined up perfectly, except for that one area that I'm pointing out to you. And that means if we do resume down over here, if we take out this low, that we have had a completion of a bearish structure taking place in the markets. So listen, I get that, like, you want to be bullish on Bitcoin. That's great when it warrants it. By the way, when it warranted, most people were bearish on Bitcoin. Most people at the right time to begin getting bullish. This is where we called out first. Watch out the bull market prediction. We came above the line and then traded below it, which means called for short positioning. And then price came up again. You have to be able at important junctures to go back and forth. Maybe this is one right over here. You can see that we came above this last line of repair, right? What's the 29,000? And then we lost it. And then we regained it, but then we lost it again. Well, you have to be looking for the upside as well, right? Where is this pattern negated? I said that for it to trigger at this point, we need to go ahead and take out this low, right? Then the structure is complete. It's uncanny that the way that it's matching up looks exactly as it's occurring in the schematic over here. And for it to trigger, you need to take out that low. But where is it nullified? Where is it invalidated? And if it's invalidated, what happens? Where do we go on the upside? It's very easy. A couple of things that we are looking at, and the invalidation occurs right over here. It's this sloping down trend line. This, you could say, at the same time, those that are bullish on Bitcoin, I could say, well, we're looking at a massive up move. The bull markets began, and what we're seeing right now is a pullback. It's a pullback for ants if you're a Bitcoiner. It has been nothing more than 15, 16%. That is nothing out of the ordinary. That's actually rather shallow. And you could see that this looks to me like that could even be a bull flag, right? You can see it's a bull flag developing over here. And if we break to the upside of this trend line, that and close above it, that then triggers the resumption out. And where does that resumption out take you? By the way, don't get like all gloomy if you're bullish on Bitcoin and you're seeing some bearish things enter the market. Because a lot of Bitcoiners out there, they're happy about the pullback. Again, a lot of people are bullish, and maybe they took the bear market trendline breakout. And then the U.S. banking scare got them out of their position. Completely normal. They might even flip bearish over there and sold the bottom. I don't know. Maybe they chase back up over here at the top. There's nothing easy about it, right? But a lot of people will be looking if there's a test down over here. And this is where the bulls really need to hold the line if that were to happen in this area. But that's nothing more than a healthy pullback on Bitcoin as well into the test of the bull market breakout. 34%. It needs to hold. Otherwise, it becomes quite concerning. And I would argue that was the failure of the bull market breakout. And don't worry, at some point down the road, there'll be another one. There you go. So let's keep going over here. Upside targets. It's why we started this session off. If we get a breakout above here, nullifying this bearish structure that is developing, and not only nullifying it, setting off a bullish resumption of the trend in place, because the trend in place is up. What type of upside targets are we looking at? That's why we started today's session off looking at Nick's line over here and then showing you where it comes into and why it's heading into. Now, of course, we do have that initial resistance, the horizontal resistance at 32. You could see it into here. There was a test, a wick down as support. This was held as resistance. It's almost like the Luna low and then the rally up to test it. That happened over here as well. There was a breakdown and then a rally up, right? And that's an area that could provide resistance between 32. And if you were lucky enough to take that impulse out, that might be a place where you're looking to go ahead and take some of your position off. And then above it, you have the heavy resistance. It's coming up a little higher. Right now, it's sloping downward, so it's variable. But right now, if price were to, over the next week or so, maybe they have some type of resolution today after the bell of the debt ceiling, equity markets go ballistic, bullish, and you could see that crypto flies in conjunction with them, and you could get a test into the $34,000 area And that's also a place likely you're taking profits into. Now, a breakout above there, that sets off another whole further upside. If we get to that, we'll talk about it and we'll get into that as that happens, as that occurs. So, again, if you liked today's session, go ahead and do hit the thumbs up button. It is greatly appreciated. And thank you for being here to enjoy with us. We're looking not only at Bitcoin being out of the market, CTM 2.0 for 10 days, also Ethereum as well. And Cardano here continues to be hedged, the beautiful dance, holding a short position. If the markets are indeed rolling over, if we're looking at Ethereum rolling over, then it makes sense to me that Cardano, the one with the weakest network effects over here, the lowest market cap, would be rolling over first. And then you can see that taking place right now. By the way, Friday, we have CTM meetup for the Summit team. We're going to be talking about 5 major advances we're looking at. We will then go ahead and upload that to CTM Core, and make sure that everyone is able to follow where we are headed and continue to work. Speaking of which, 2023 stocks, I mean, look at FNGU. It just took up another position, right? 100% on the year so far. And now holding another position. TQQQ lagging behind in performance by a massive amount over here. This is on the buy side, just 3% on the year. On the sell side, which is the inverse, or the buy side, it's currently down 5% on the year. So this is currently just sitting around with the open P&L that's unrealized, just around break even. And Tesla over here also on the sidelines waiting for signal. The daily time frame remains strong. Ethereum is short here on the daily time frame. It's interesting to me because you would think that the 8-hour picks up moves quicker. I mean, I'm not going to get into profitability. Look, the daily, as far as I'm concerned, has the potential more than get it done, whatever someone's wildest expectations for what they could do in the markets. And it's very easy to trade, but the 8-hour outperforms it. There's no question about it. You think that the 8-hour would pick up trades quicker than the daily, but not so here on Ethereum. You can see Ethereum on the 8-hour just out of the market. We're holding a short here on Ethereum on the daily, while Cardano is out of the markets, and Bitcoin is not only out of the market, Bitcoin is much closer to selling on the daily time frame. Let's take that out really quick and ask why, right? It's much closer to selling than it is buying. Why on the 8-hour time frame, it's actually much closer to buying. On that resumption out, you would see 8-hour buying, and it's very far from actually looking to take a short position. We'd be breaking well under that $25,000 level before it started selling short. So it's just interesting. It's just the way it is. But on the daily time frame here, much closer to entering on the short side on Bitcoin than on the long side. And that is very, very interesting. Luke, that's awesome. Have you been using ChatGPT or are there any AI tool to help write the book? I find it really good for forming outlines. I'm not sure if you've been able to utilize that or if it even would for what you're trying to do. Interesting stuff over there. But the daily allows people to afford a lot of freedom. Built up a nice stack over last year. Done accumulating physical right now. All set for when it happens. If there was an event, Canadian investor, if an event, right? An event would be some type of liquidity crisis. That's the only thing that I imagine that could bring us down to test the FTX lows. We talked about the major event that was when we traded under the previous cycle ceiling, and it was the collapse of a gigantic scam, $8-9 million. Oh, editing. All right, everyone. That was, gold and silver coming off ahead of the debt ceiling. That's weird. You know what? I wanted to pull up gold and silver. How much are they coming off? Nah. Just a little bit here. Silver holding up better than gold. No, what am I looking at over here? Gold down 1.5%. Silver off 0.6. All right. I wanted to bring him into today's session, but I was highly focused on Bitcoin. And to tell you the truth, my intention today was to actually be talking about like the bullish nature of what's occurring on Bitcoin. And after making sure over the last couple of weeks, we were prepared for any type of downside risk across the markets. Completely not out of the woods by any means. Everyone is aware and prepared though for all of that, was to move back towards like what's taking place and potential upside moves on Bitcoin. But that's not what's happening. I mean, it could happen very quickly again if we get a break above this trend line. That would set us back towards a buy impulse and upward momentum. But right now we have lots of bearish structures potentially developing, whether or not it is something like the distribution pattern that I could see over here or the bearish structure. And so I had to focus on what's here regardless if I wanted to or not. I hope you could appreciate that. All right, everyone. God bless you. Thanks for being here. I'll talk to you all tomorrow. Have a beautiful day, everyone. Have a great day. Health, health, health. We were just talking about that before going live. Is so important. Listen, if you want to perform like an elite athlete or on an elite level, you need to be in really good shape and form. If you're not, one of the things that you could best do to begin is simply beginning to go out for walks daily. Work yourself up to 10,000 steps, which is roughly 5 miles, 7.5 kilometers, más o menos. And if you start doing that, you're going to start instantly, the first day you do it, start to feel better. The better shape that you're in, the more clearly you'll be able to form thoughts and think. It's essential. Take care of yourself, everyone. Have a beautiful day, and I'll see you later. Thanks for... we wanted to talk about Ghost in case you're still here. The question came up and is whether or not that CTM API link to execute automatically. The way that our templates are set up, we call it the moat, the mother of all templates, is that it allows easily for execution. Now, some people do that in-house through their own Python scripts. Other people do that through third-party services. It could be something like 3 commas. It could be something like Wonder Trader. It could be something like Traders Post or something like Capitalize.io. There are a plethora of them. There are many different. You just go ahead and you set the webhook with the correct verbiage to execute. The automation is easy, but it does not come without risk. Now, by the way, if you have a winning edge in front of you, that's one thing. Being able to have the discipline to execute it off of it is another. My experience is it usually takes people about 3 to 5 months before they realize that they need to stop doing everything but fully commit and that they're going to be much better off for it. But it makes discipline a lot easier if it's completely automated. It's not without risk, though. If you remember recently, in 2022, most of CTM was just trading automation. But then 3 commas had some API hacks or leaks. And people lost money. And it's not without risk whatsoever. Automation is easy to set up, but it's not without risk by any means. All right, everyone. Thank you for today's session. Thank you for being here. And lots of love to you all. I'll talk to you later.